greetings and thank you very much for your time. Let's talk in general about Trump and China. How was this trip received in Europe? What do you think his goals were? What do you think he accomplished at all, if anything?
No, I don't think he accomplished much at all, but it is interesting to observe what he hoped to achieve based on where the disinformation comes in. Because, with China, some of the main stories we got were, it seemed as if China was falling in line, essentially bowing to U.S. pressure and putting pressure on Iran. So the first and I think most important commentary, which came from the Trump administration and then disseminated through the media, was that the Chinese wanted the Strait of Hormuz to be opened. Now, this sounds a bit like giving support for the United States, because the U.S. defines its mission as opening up the Strait of Hormuz. But to have open access for China, it doesn't mean that the U.S. should prevail. Indeed, the Chinese don't have access anymore to Venezuela. They don't have access to Cuba. So the idea that an American victory and conquest would result in open access for China, it's not correct. And indeed, I think the Chinese access can be achieved in cooperation with Iran. So, but you also saw a similar comment being made about the nuclear weapons. That is, China now supports the U.S. position that Iran should have no nuclear weapon. But this was also not very controversial. Iran itself says it doesn't want nuclear weapons. No country in the world wants Iran to have nuclear weapons, which is why the Iranians have in the past accepted these intrusive inspections under the JCPOA agreement. But also the idea that Iran would give up all its enriched uranium, this is also false. There's no way they would do this. And, at most, perhaps...
Okay, Professor. At least one of my audience is tuning out because she knows better. All right, let's see where we are. You didn't recognize my face with my big, huge nose? There you go. All right. Upa is first. Upa is first. Hi, Pete the Greek. Can't believe they still have red on Railtown. They still have their hands on it. Pressure, down, down, down every day. But you learned a lot about that the other day, didn't you? What they do? So Energy Vault's down 11 cents at 472. So that precludes my aforesaid gentleman from selling and swapping out. So once you freeze, you freeze. ZJYL 228. HLP down 28 cents to 66.71. Oh, well. MTEN $1, 1.03. Finger is up a penny, 0.0105 at 82. And Railtown is down 0.0043. Dow is up 500. NASDAQ is up 350. S&P up 65, where the markets are waiting on NVIDIA, as they call it, up in parts of New York. And maybe in London too. Oil plunges as Trump says U.S. in final stages of Iran deal, which could be because MBS and others told him, you can't use our air bases. And Biden already gave away your airport. China now has it in Afghanistan. So you're plumb out of luck. OpenAI files for IPO in the coming weeks. That one, if I had to pick one that might be a victim of a bubble popping, it might be that one, but I don't know. Everything's new. Wall Street counts down to NVIDIA earnings. I suspect the NVIDIA earnings are going to be excellent. But you know what? That is not a big call. You know, I looked up my favorite analyst. What's his name? Ken Stiles. He recommends you buy Broadcom and NVIDIA. So there, you don't have to listen anymore. All right. Where can we go from here? I don't have a lot, and I'm going to sign off by 4 because I have an important date with a conference call. Most exciting thing that's happened in my life in a long time, a conference call. So I have to get on that. And until then, we will try to talk about things. Yesterday, one of your compatriots, a friend of this channel, but a friend of yours, sent me very exciting news on MMAT. That's Metamaterials. And that's a company that this entire complex of criminality destroyed. Look, it used to be if you had a company like Metamaterials, which had great technology, breakthrough, the one that I focused on when I studied, they had a whole portfolio. But the one that stood out to me is they created a membrane that would keep certain parts of electric batteries separate from each other so those batteries wouldn't blow up, so you wouldn't have fires in your Tesla car or fires in your luggage. Seemed like a pretty good invention, but all inventions need money and they need time. But you know what the criminals do? They start destroying, because they deserve the money. And they seller box companies take the money offshore without paying taxes. And then, to be blunt about it, they ask you to bomb every country that surrounds them in Tel Aviv, and they haven't paid any taxes. It costs you trillions. They steal trillions from you, and we're not allowed to talk about it. We are not allowed to talk about it. Oh, no, sir. No, sir. These are victims. These are not victimizers. Come on, guys, wake up. Wake up. Wake up. So anyway, the it doesn't say it here. All right. So I'll go back just to the beginning of it and see if I can zoom in. I can't. So it boils down to that NASDAQ lost their motion to quash. NASDAQ are represented by a really jerky attorney because they don't have a case. I listened in to one of the court hearings, and that guy was a loser, but he's arrogant. Forget his name right now. Might be here. So Metamaterial is the debtor, and the bankruptcy court judge, I don't see his name here, ruled that they're going to quash the Chapter 7 The motion was taken under submission March 10th. I'm trying to get to the one sentence that summarizes it all. So NASDAQ doesn't need to analyze any of the orders. They have to provide all orders, executions, cancellations, replaces, order type modifiers, and order attributes for all transactions related to MMAT and Torch. That's trouble. That's trouble for NASDAQ. That's trouble for Fidelity. That's trouble for trade. That's trouble. And they denied everything else. It's so ordered. So that's a real breakthrough, and it'll cascade over to MMTLP. So it's fantastic news for everybody. I still believe that you need to at least go on record that you asked for your shares to be transferred to NextBridge ownership at the transfer agent. I wouldn't rely on the courts or the system to give you a big payout, but hey, dreams are made of this. All right, so that was one bit of news. Let me go through some of these names of other stocks. HLP, I just mentioned to you. I heard HLP had something going on, but of course the stock's down by a third. Finger, I heard there's, something in the works, but, same thing. GDC, it's a little bit up. Huge volume on that stock. Next Trip is the one that may be NTRP. Next Trip, NTRP. Apparently, it might rake, rattle, and roll. Something coming up. And then NRGV. And of course, NRGV's down. Look, it's $1 billion company. And sometimes you have to sell when the news sounds the best. I don't know why it's down. But anyway, the thing I want to say about all these companies is each story might be interesting, and there's always a chance you can make money on those trades. But if you own Railtown, or if you own these other stocks and you take your losses, shift to Railtown, if Railtown, let's say you have that gentleman could have purchased nearly 600,000 Railtown. Now the other day he could have purchased nearly 500,000 Railtown. I don't know what he can buy now. But let's say he gets 500,000 Railtown. It goes to $10, let's say. And let's say it stays there or higher. Well, he can sell 10% of his account, set up another trading account, and he can buy all these, follow Dan Borders, Frank Benedetto, who those two guys I wouldn't trust, Ham, Tony the Timid Tiger. Follow them, do trades in them, lose that money, but you're only playing with 10%, 5% of your net worth at that point. And if it's something that interests you, like a hobby, treat it like a hobby. Treat it like going to the casino. Treat it like playing bingo. Sometimes you come home and you won. Most of the time you don't, but you got some time with Gertrude and Mother Mary Magdalene, and you're able to donate a little bit to the bake sale and say hi to Father on the way out, and you get other benefits. So anyway, that's my point. Is there is a risk some of these stocks might, one of them out of them all might have a move, and you're going to say, what's going on with Railtown? Well, all right, let's get to Railtown. It is now May 13th? No, May 20th. May 20th. By the time of Bob Hope's birthday, or by the time of John F. Kennedy's birthday, could there be some news? I'm not optimistic. I don't know. I think between now and maybe June 2nd, which will be June 1st, which will be the first trading date in June. We might see earnings at Railtown, maybe. But it really doesn't feel like anything's coming in the next couple of weeks. So we just have to steel ourselves. I think it's going to be worth the wait. I do not think you should be a day trader. I do not think you should be getting out. I think you should be adding to your positions, because when finally the log jam breaks, I just don't think you're going to be able to get back in if you got out. And if you're not in, you're going to be chasing an accelerating upside moving stock. So that's how I feel about it. Let me go through some of your comments. Hopefully you'll have some things that you want to talk about that'll get me interested. I get a little bored saying the same thing over and over again. I also, I forgot, I did want to apologize, blanket apology for getting so upset from time to time. You shouldn't have to know all the intricacies of the market. You shouldn't have to know about the criminality. But they steal from you every single day. And the setup is basically they steal from you as taxpayers. They steal from you from your military. They steal from you by owning all of the media. And they steal from you in this complex short selling game. And it shouldn't be allowed. And they steal directly from you, and it kind of upsets me. So they steal from me too. And it's all got to be allowed. It's all got to be allowed, because if we point it out, oh my God, you're being anti something. It's not about that. It's about 50 to 100 guys ripping off the entire North American continent, and they've been doing it for 20 years. Maybe it's 200 guys. It's not many. All right. So I apologize for getting upset. It does upset me. And sometimes I get a little bit too worked up on it. But I'll try to contain that in the future. Can't promise. Let's keep going. Bellinger. Bon mercredi, monsieur Guillaume. Mercredi is Wednesday. Très bon, monsieur. Très bien. Comment ça va? Ça va bien? Oui. Oui or no? Thank you very much, E. Belanger. Ralph Fan, nice haircut. Thank you. It's about 3 weeks old, but it shows the state of my hair previously that you could still notice it. Sada Aman, hi, Sada, good to see you here. I think you called me or gave me a message. I can't remember. Oh, it's up here. I might have something for you this evening or tomorrow, but I've been working on having something to relate to you. But good to see you here. Very good to see you here, Sada. Pat M, hi y'all. Joe Marty. Hey there, William. Added. Wow, Joe Marty. Awesome. you're doing the right thing. E. Bélanger, great article on Substack. Thank you. Yeah, I put up an article on Substack that I've been working on and off on. And frankly, by the time I put it up, I didn't proofread it yet again. So it may or may not come across well. But my whole theory on Substack, the article, and the one I emphasize for people who, particularly who lost money in MMTLP, but it's true across all of these stocks. What my view is, the attorneys are controlled by the banksters. The banksters create the Jeff Eastons and the Kurt Kramers. Kurt Kramer's not smart enough to come up with that document. That ain't a smart guy. He spun around Wall Street 4, 5, 6 times in 2 years. You can look it up. I don't remember the exact number. That's not a bright guy. But he knows how to steal and put an unlit cigar in his mouth and walk around in a Joe Gotti suit. Impressive guy. Impressive guy. Only a mother can love him. But just take my example on MMTLP, my personal example. Basically, I purchased 4,269 shares in my IRA and my regular account, some sort of breakdown, at essentially $8. And if you add in the commission charges, it was over $8 per share. So I spent $34,152. Let's call it $34,000 on MMTLP. And this is lost. Now, the argument is, and I've been fighting for everybody, the argument is that they, who's they, owe us a short squeeze. They took stock trading from us. They owe us more than the $8 plus suffering and all that. They. But who's paying the hard costs? Who's going to pay when the hard costs are no longer being paid? I don't know. And that's when attorneys start scrambling so the attorney can pay for their new guitars. The attorney can pay for their kids to go to school. The attorneys scramble for settlement. And they say it's the best you can get. Really, it's the best they can get. That's our system. So in my case, I'm hoping for $8 plus pain and suffering plus a short squeeze. Lots of luck is how I look at it. So I moved my TLP over to NextBridge. I personally believe that was justified by the NextBridge fighting. I think this stock's going to be worth $15 or more out of the gate. I haven't convinced myself, but I trust Junk Savvy's judgment and her information. She thinks the price is capped at $15. I haven't been able to convince myself of that because in my experience with demand, those prices go up and the number of shares go out. But anyway, so here's my situation. MMTLP, I've lost 34 grand. So here it is 4 or 5 years later, I can count on the attorneys. I can count on Ann Wagner. I can count on Adina Friedman. I can count on the SEC. I can count on plump Robert Cook. Or can I? So I lost 34,000. Doesn't work. Just did work. So I lost 34,000 there. So what could I do? Well, if I assume that, and I believe in the story, that Railtown's going to go to $3.40, or I believe Railtown's going to go to $2, or I believe it's going to go to $5 on its way to 10, 15, and 20. I pick a number. I don't know. Let's pick $3.40. So that means you divide 34,000 by $3.40. I need to buy 10,000 shares of Railtown. And that's going to cost me $3,500. So I'm going to be out $37,500. I believe Railtown is going to go from 35 cents to $3.50. So I need 10,000 shares. Why? Because that gets me to the original loss. But I've now got the additional cost of buying. So what I really need now is my 10,000 shares of Railtown to go to $3.75 a share. That gets me in the green for Railtown and for MMTLP combined, $3.75. So what does that mean if Railtown goes to $7, $7.50? Well, I have 10,000 shares, and Railtown let's say goes to $7.50. That means I have $75,000 in my account, minus the $37,500 that I have to make up. I don't know, is that right? So it's $7.50 a share. Not only have I made up what I lost, I have a $37,500 profit. I've doubled my money. And by the way, if it goes to 15 like I expected to do, I've got four times the money that I lost in MMTLP and what I paid for Railtown. And that's my strategy for not being a victim, using the system that these dunderdecks, blockhead, baloney head guys are using. They have these automatic computers selling. They don't care about the story. I mean, I think it's an open question whether or not there's a big short. They may just have gone back and forth all day long. But still, they're selling it to us. What they call it to confuse you and make it sound good, they're selling you synthetic shares. Well, you ever gotten a synthetic flower or ever had a synthetic love affair? Got a synthetic, I don't know. Doesn't sound very good. It's not real. Anyway, take advantage of it. They're giving it to you. These synthetic shares, take them. And we can turn the whole system on its head. And I'm not saying there's going to be a short squeeze. We've got to be aware of that possibility. But what I am saying, the part we're taking advantage of is these shares wouldn't be available otherwise, other than their hubris and maybe they make money each day too. I don't have the inner workings. They may go home flat. And still make thousands of dollars every day. But anyway, that's my theory for how you can make your money back on MMTLP. I think it's a good theory. I think it's a good strategy. And that's what the Substack article was about. Scott Day, good afternoon, Bill and crew. Added, all right. All right. And look at how your average came down to 33 cents. I guess it's if you're like me, you're never satisfied. You get it down to 33 cents, and in your head late at night, you're saying, I could have gotten it down to 31 and a half, if you're like me. But that's great that you added 437, and you have a great position at 12,000 shares. Congratulations, Scott. Bravo. Pete Greek continues to mow them down. Whenever he enters a ticket, the competition shudders. Bought 10 shares. I love it. I love it. Those 10 shares could be worth a trip to Athens. I mean, if you live there already. 53,161. Good for you. Jack Hamilton. Good afternoon, Sir William. A little low on extra funds, but still holding strong. Go RT. Good for you, Jack. We can't always be buyers. I know that feeling. Coulda guy. Afternoon, William. Finally had a chance to catch you live again. I'm sure your life was suffering for the lack of me in it. Good afternoon. Finally had a chance to catch you live again. Still adding a few RT shares here and there. Total. Awesome. Kudakai. Awesome. Great position. Great position. 14,125. Bravo. Volstoy King. Afternoon, everyone. Kudakai. Can't buy them in my 401k. If I could, I would definitely dump Finger and buy RT. I'm down over 65k in Finger and GDC. Well, your mathematics, your arithmetic is a little more difficult. But let's just see if we can figure it out. So you're down 65,000, and it could get worse, frankly. But it can't get much worse than GDC. And GDC, maybe, the guys manipulating it might have a strategy. Who knows? Finger, something big might be coming. But let's just go with where you are now. You're down 65,000. And you have 14,125 Railtown. And let's just say you paid 40 cents for it. So 5,650. Let's say you paid 6,000 for it. So that would be 42.5 cents a share. I don't know. Let's say that you paid 42.5. So you're down $71,000 on Finger, GDC, and Railtown, right? Down. I mean, that's money either lost or at risk. 71,000, but you have 14,125 shares of Railtown. So your number isn't. I think it's cheap and fully achievable, but it's not as low as the one that I was using in my last example. But it's still a great number, Kudakai. For your entire position, your losses in Finger and GDC, your cost of Railtown to go green, you have to be higher than $5.02 a share. And that's with only, it looks like small position compared to some others, but with only 14,125 shares, which I think's a great position, you can make back your losses and your cost just having Railtown go to $5. Now, that's not a promise, that's a projection. We don't know. Anything can happen. But I think anything that gets Railtown to $5 gets it to 10 or 15. Now, Tony and his sidekick, Platinum Blonde, made fun of me when I said that a year ago. But I stand by it. Of course, it's a year later. And if he had predicted nothing would happen for a year, I'd give him congratulations, but he didn't. He actually bought the stock at around 50 cents. So he doesn't know what he's talking about. He's just in the peanut gallery. But Kudakai, do you see that there's actually hope for your account? And I think not only will you go green at 505, you're going to double at 10, triple at 15, quadruple at 20. And I think, by the way, I still think the stock can go to $55. I'm less thrilled to make a specific projection as to when, but anything that gets this stock to 5 is going to make it seem to research analysts valued much higher, at least 10x higher. So I think Kudakai, you've done a brilliant thing, and I mean, obviously taking losses in your 401k doesn't help you. But regardless, you can make up your entire cost of buying those two stocks at $5 a share. So I think it's great. Chestnut. Good afternoon, William and all. I picked up 31.50 more RT today. Chestnut, 31.50. Good job. Good job, Chestnut. That would be the highlight of my day if I could hug that dog. I met a Great Dane. I wanted to hug him, but he started barking at me. But his tail was wagging, but I didn't hug him. But I think he would have liked it. T. Alex. Hi, T. Alex. Good job the other day. T. Alex, thank you for your stream the other night. I have listened to it about 3 or 4 times, and you've gone completely mental. Thank you again. You are appreciated. Yeah. That's better than a Taylor Swift song. Ricky Brogan, you need it to go up 20 to 40% higher to pay taxes. Well, fair enough if you can't take the losses, but in a short-term situation, if you've sold the others, you've got the offset up to the cost. So in other words, just pretending all of this were in a taxable account, all the way up to $5 is offset by the losses if you sold, if they're short term. So in other words, the gain of 65,000 can be offset by the losses of 65,000. So to that extent, you don't need any more. But you're right. Once you get into the doubling and tripling, you're correct, Ricky. You probably need higher numbers, which is one of the reasons I don't think we should sell. You're going to get just like in your house, every year it goes up, sometimes down, but over time, the last bull market in real estate, it goes up, but you're not paying taxes every year because you don't sell it. Well, let's not sell our Railtown unless we have a reason to. You and a couple of others still can't accept that Railtown isn't a trade like a day trade or a trade of some of these other stocks. I think Railtown is a foundational one decision stock. Buy it and hold it. Now, it doesn't mean diamond hands. That doesn't mean don't be aware of your circumstances. But it means that a Railtown conceptually could be purchased by an IBM or a Microsoft or a NVIDIA for $50, $70, $100 a share in new stock, and you would get that entire increase without paying taxes. And then you're in a, quote unquote, a blue chip stock. Subject to ups and downs too, but you could hold that, collect whatever dividend, or you can buy puts and calls against it, or you could sell it and take your taxes over time. But if Railtown goes from here to my number of 55, you're essentially getting 200x. And if it goes there and you don't sell it, and if it goes there and an IBM buys it, or as I may suggest to many of you, if we set up a company, which I'll run, to take advantage of other investments, you could transfer the stock in without selling it. But my point is, you don't pay taxes and you get 200% on your money. If that, again, it's a prediction. It's a projection, not a promise. So we have to have it actually happen. But there's no reason to book your profit just to say, hey, I booked my profit. Now I'm going to go into what some Goober Jones tells me I need to buy because he's being paid 15 grand a month for 6 months to prop up retail interest, and he's getting 50,000, 100,000 shares of stock free to trade that he can dump on the market so he can pay for his kids' education and his automobile and his vacations and his wife's jewelry. And when the stock goes up and back down and you challenge him, he'll say, hey, I got out. Why didn't you do it yourself? Do your own due diligence. I'll challenge you any day. Come on and debate me. Meanwhile, you're licking your losses, and he's on to the next stock that he can hum and drum and hum and bum and thump you with. Why get back involved in all that day trading crap? Why not just buy Railtown, let it either be bought by IBM or somebody, or become the unicorn of unicorns and not sell it? what is it that to have value in your account, it has to be in dollars? Can it just be in the equity of the stock? I would say yes. I would say yes. Pat M. Ricky is right. Thanks. Yeah, he is. If you sell, Ricky's right. You probably have to bump it up in this example. But in my first example, to be safe, maybe you have to get $10 a share to cover your taxes. So that changes the drama of my presentation, but it doesn't change the overall point. But Ricky, you're right, Pat, and Ricky's right. But I personally don't see a reason to book the profits. What's your alternative? Pat M, unless you can use Roth. True. Use a Roth. True. True. Edward, darn it. All right, we'll go to Donna. No, I guess we won't. Donna, hello, everyone. Hi, Donna. Donna says, today is the lowest volume I remember seeing in Railtown. I'm waiting for my money to clear tonight. Good luck. Good luck. Yeah. I appreciate both sides of that comment, because that means that you're thinking things could happen quickly. On the other hand, we are all waiting. So we'll see. I think you're going to get in on it and get a good number. As Ward always says to me when I talk to him, bonus shares. They're bonus shares, Donna, if you get anything. Edward Nunny. Hi, William. I bought 23K. Edward Nunny. Yay. That is a great position, Edward Nunny. 75,000 is awesome. And just guessing here, but it looks like you rounded your cost basis downward. I personally think that's a professional investor. Others, day traders, would argue with me on that, because day traders are day traders. They don't care about information. But to me, if you know the story, you have an idea of the value of the stock, that what you think it could or should be, why not average down? And I think it's brilliant what you did, Edward Nunny. Congratulations. E. Belanger. Edward Nunny, metal yellow first, red. Pat M. Donna, did you sell the gold? Ricky Brogan, June 9th will be 18th month since I've been buying RT. Don't plan on selling anytime soon. I should give you my first day I bought it. I might be able to, actually. Just thinking, how can I do that? Don't know. I don't know if I can do that. See, I don't think I can do it on this. Yeah, I don't think I can do it on this little thing. Let me see how far back history goes. 30 days. It's not going to do it. All right, so I can't tell you, but Ricky, I think my first purchase, which is probably 40 to 50% of what I own, was I would say it was November, might have been October, but I think it was November of 2024. So that's it's almost as long as yours. I'd say it's 17 months for me. And the rest of it I bought, or the majority of the rest I bought on June 5th, the Thursday, of that June, if it's here. No, of course it's not. I think it was Thursday, June 5th, 2025. So that'll mean that everything's long term in about 3 weeks. But yeah, it's been a long time. I would have to agree with you. Ricky Brogan, Adam, thank you. Ricky Brogan, first buy for me, November 11, 2024. I'll have to try to look mine up before the next call. You might be earlier than mine, E. Belanger. I just can't remember exactly. 3,900 shares at 33 Canadian. Is that what you paid then? Yeah, I'm not going to add it to your number, but that's what you paid, 33. Wow, that's a good price. Pat M. I did, but it was just 1/10 of an ounce for $4.50. I found a few $100 in a credit union account. So I've scraped together 800 in a taxable account. That's good. I mean, you can always probably put 800 back into your credit union and buy 1/10 of an ounce of gold, and keep the rest in Railtown. Ricky Bro, December 9th was my first purchase. You had already bought. Oh, so you were listening when I liked it. Yeah, when I first bought it, I thought Railtown was a perfect analog to another company in oil and gas that I was raising money for. And that company will be, I think, at some point purchased by Halliburton or Schlumberger or Exxon, or, you know, or some other large company. And I figured that's what Railtown would be. It would be a situation where, as you know, in November, December, October, they were out pitching woo to all the world through conferences. So I figured they'll just go get customers. They'll prove concept with customers, and Microsoft will buy them because they were embedded, still are embedded in Microsoft. And then the story's only gotten better and better and better, starting with, sorry, I think it's pollen, starting with buying AIP, which took forever, and then something's going on, I think, with TELUS. We have some clues and some hard information, and that's taking a long time as well, but maybe other things are going on. So to me, the story's actually gotten better, and I'm glad it didn't just flip out in a trade to Microsoft. But what if we had to put in time? We've had to put in time. And I think it's going to be, it's going to look like a short period of time. Although this gentleman that I've mentioned to you over the last couple of days, he's, Energy Vault is down, so he's not going to sell, and he's not going to move over to Railtown. And when Railtown does finally move, he'll probably consider doing that then. But Energy Vault's now 473. It was almost $6 for the last 3 or 4 days, but he's not going to sell it down now. And he still has a nice profit, but it was higher, so he's going to wait for that. And HLP's now down 40 cents to 54 cents. Swell. Just swell. So now to go back to 99 cents, it's got to go up 100%. MTEN's $1. That was 27 when friends of mine were buying it. It's $1. Finger is 80 cents. ZJYL is 228. I don't even have GDC up here. I guess we could look at GDC. $0.11, 0.1155. So, you know, you try to catch a shooting star and you end up with a bunch of, I don't know what to call them, falling knives, duds. And it's just tough. Then you're frozen. Can you get out? I mean, I'm live right now, but that HLP does not look good. That does not look good. What's the volume on HLP? Not much, 815,000. So it's like people were waiting for news, and the news was disappointing. It's like one of those. It's unlike GDC. I heard GDC had 500 million shares one of those days. Today, the volume's 180 million shares. Do you think the short position still exists after all that? Maybe the guy that announced that he was going to buy the whole company, or they were going to buy back 100 million shares, maybe they're in there buying now. I don't know. NRGV's volume is 2.5 million. Anyway, let's keep going. Let's go back up. I missed somebody. No, I didn't. All right, so Pat M. Donna, nice way to repurpose assets for a better reward. Donna M. Sorry, Pat. Gotta start proof before I hit. You mean proofread, I guess. Donna M. Pat, I'd be interested in seeing the tax ramifications. I can always roll 8,500 into my Roth come January 1, 2027, or whatever my Roth limit is under my husband's Roth amount. So there is a reason to stay married. 477 to 478. Why am I watching that one? Let's go see what's going on in the news. "30-day ceasefire in Iran. It's better than bomb, bomb, bomb." Do you want to know the ranking of America's morning show hosts? I don't. Bum, 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 rain. Amazon's Jeff Bezos calls for zero income tax on bottom half of earners. That's it. I'm going to stop trying to strive. All right. Let's see what everybody says. Pat M. As long as he collects earned income in 27. Yeah, he's got a pretty good job. Pretty good business. Donna M. Volume is kicking up a little. Yeah, it won't be. Remember that guy that came on here said he's going to. He didn't say it exactly, but he implied he was going to buy 1 million shares. He never did. Rick Brogan. Had to get back on X. My YouTube is locking up, but I plan on upping my position 40%. That's fantastic. I wouldn't. My own view, and I know it's like crying wolf or being a broken clock, but I wouldn't wait. I sense anyway that Donna feels some urgency. I don't know if she does, but I would agree with her. I think it's better to buy now. And if you have to wait it 2 weeks or 2 months, okay. But it's better to buy now and miss it by a day or 2 days, and then you're buying at a much higher price. I would still buy at higher prices, but good for you, Rick. Donna says, Pat, he's still running his company, which doesn't answer Pat's question. But I think his company is a very successful company from what we have learned. All right, so it's 3:00. I'm gonna go through Jim Rickards' strategic intelligence, which I think is where I got the idea of intel, but I might have gotten intel from David Morgan's report for some reason. Or I got it. There's one other guy I follow. Anyway. So this is how Jim Rickards' May 2026 issue starts. I'm not going to read all of it because that wouldn't be fair to his subscribers. But a financial meltdown is unfolding in the private credit market. That much is clear. What is not yet clear is whether to the private credit market itself, or whether losses will spread to banks, insurance companies, 401k accounts in a way such to constitute a full-blown market panic. The process by which losses spread in capital markets is called contagion. Contagion is infamous. In fact, the mathematics of how risk can spread across institutions is identical to the math of how a virus can spread in a pandemic. In virology, it's called SEER model, susceptible, exposed, infected, recovered. If you are not susceptible or not exposed, you don't catch the virus. If you're both and get infected, you have to go through it until you recover. It's no different in finance. Thinly capitalized banks are susceptible. If they have weak credits on their books, they're exposed. If loans go bad, they're infected. Whether they recover or fail is often up to the Fed. These variables help us predict the risk of collapse in banks and brokers. He goes on to talk about some examples in history. A $5 trillion vulnerability. While the world has been focused on the economic impact of the war in Iran, the private credit crisis may be the greater short-term threat to the stock market and economic growth. Private credit funds, also referred to as non-bank financial institutions, make up a $5 trillion market in loans to companies financing everything from software startups to subprime auto lending to purchase of tech equipment, often arranged by the seller. Most of these loans are junk. Only some are investment grade. He shows a chart of where they're spread. They're in IT, healthcare, financial services, consumer products, and business products, all to significant extent. To small extent, very minor extent, they're in materials and resources, gold, silver, miners, energy, very small, just slivers, and some small financial manipulations. So basically, that's your market right now. Energy and miners are underfunded. It's a great time to buy. The rest, you could argue, if they're already into private credit, it might be a bubble there. A $5 trillion market meltdown does not mean $5 trillion in losses, but even a 20% loss rate, which some analysts are projecting, translates to $1 trillion in losses. That's not counting derivatives. Recall the subprime mortgage meltdown in 2008. It involved $1 trillion in subprime and Alt-A mortgages. That was enough to nearly bring down the global financial system. I don't know if any of you remember the S&L crisis of the 1980s. I do. That was when I lost my first $1 million on paper. Involved about, or almost $1 million. I don't remember the exact number, but it was crushing. Involved about $800 billion of bad commercial real estate loans and took years to resolve. The private credit meltdown started on September 10th, 2025, with the bankruptcy of Tricolor Auto Acceptance, a subprime auto dealer. Losses at Tricolor may exceed $900 million. Is that $1 billion? Top executives have been charged with fraud and other crimes. Also in September 25, subprime lender First Brands filed for bankruptcy with liabilities of 10 to 50 billion. UBS had exposure. Initially, Wall Street treated these two private credit failures as coincidence. It took time for lenders and investors to realize that Tricolor and First Brands were the first dominoes to fall in a string of private credit failures. February 3, 26, Goldman Sachs and Barclays released research showing that weakness in the software sector, a major area of private credit exposure would be worse than expected because of AI applications, raising the risk of loan losses. In other words, old software, SDKs, that's not going to cut it anymore. If you're a software solution company, your software has to be Railtown. No, I exaggerate. It has to be AI. February 21, private credit fund this year, Blue Owl had fallen to multi-year loans. On February 26 this year, UBS Asset Management estimated total credit losses in a meltdown could reach 1.8 trillion. That day, KKR Capital, with 13 billion in assets, dropped sharply after cutting its dividend. Deterioration continued on February 27 this year when UK-based Market Financial Solutions, with a $2.4 billion loan book, collapsed. On March 1 this year, Invico Capital, a Canadian private credit fund manager, suspended investor redemptions under what it called a, quote, structured liquidity management plan, effectively gating withdrawals. By March 3, Blackstone's 82 billion private credit fund faced redemption requests equaling almost 8% of shares outstanding. On March 6 this year, BlackRock imposed gates on withdrawing from its $26 billion HPS corporate lending fund, trapping investors until assets could be liquidated. Similar moves followed at Morgan Stanley, among other major firms, while JP Morgan began restricting lending to the private credit sector before marking down its own exposure. No doubt there will be more defaults, more gates, and more asset markdowns. The private credit collapse is just getting started. The system can reprice all at once. Fraud, double pledging of collateral, and poor risk management account for many of the losses so far. But one of the most important and least understood drivers of contagion is mark-to-market accounting. Private credit funds carry assets on their books at specified value, usually close to historic cost, unless the transaction forces revaluation. In a declining market, this practice is known as extend and pretend. In other words, just keeping them on the book at historic levels. Managers carry assets at inflated values, delaying booking losses, and continue to charge fees on the higher asset base. I know you love Wall Street, don't you? They're always looking out for you. Always looking out for you. And by the way, while they're charging those fees, do you mind, could you come over and bomb one of these big countries next to us? We don't pay taxes, but could you spend trillions of dollars bombing on our behalf? When one of those loans is sold, it finally reveals what it is actually worth in the market. And that price is often lower than what the fund has been claiming all along. That is where the trouble begins. Once a real sale happens at a lower price, accountants step in. They're so annoying. Quote, if that loan is worth less, then similar loans are probably worth less too, unquote. So the fund is forced to mark down the value of all similar loans and not just the one it sold. But it doesn't stop there. Other funds holding similar loans now face the same issue. Their accountants see the lower price and require markdowns, even if they haven't sold anything. Losses move from one loan to similar loans, from one fund to other funds, and that chain reaction is what we call contagion. Losses remain concealed as long as assets are not sold. Private credit fund practices go beyond accounting and introduce structural risk. Leverage acts as a conveyor belt, moving losses throughout the system. Private equity firms rely on private credit funds to finance purchases and operations at companies they buy. Maybe risking only 5% equity, funding the remainder with 95% debt from private credit. So you have interlocking exposures. Now this gets into our area, AI, this gets into our area. One of the largest areas of exposure now is lending to software companies. These are not firms like Microsoft or Google, but are early stage developers and startups. The Blue Owl Credit Income Fund has about 11%, 12% software exposure. And then the Wall Street Journal found another 5 or 6%. So they have exposure for 21% in their fund. Blackstone Private Credit Fund, both reported and found by the Wall Street Journal, almost a third of their portfolio is software lending. Ares Capital, ARES, almost 30%. Apollo Debt Solutions, about 16, 17%. Banks are deeply exposed as well. Moody's estimates total bank exposure to private credit at almost, well, at 925 billion. Major banks including Wells Fargo, Bank of America, PNC, Citigroup, JP Morgan Chase, Goldman Sachs all have significant exposure. All of these developments, escalating defaults and a private credit collapse, were already in motion before the war in Iran. Now, investors can expect those trends to intensify. Financial crises are frequently caused by multiple events happening at the same time. Under normal conditions, those events may not be correlated, but they become correlated during a crisis. This is known as conditional correlation. It's what happened when the Russian default collided with long-term capital management in 98, and it's happening again in 26. If one compares this to the 2007-2009 financial crisis, we are not yet at the Lehman Brothers phase. We're closer to the Bear Stearns hedge fund failure, which came earlier. Higher energy prices, persistent inflation, elevated interest rates, overcapacity in software, rising unemployment, weaker consumer spending are converging to make losses in private credit a near certainty. Whether those losses trigger a broader crisis through contagion is an open-ended question, but investors should not wait to find out. All right, he talks about Dan Amos, who writes good articles, talks about how private equity made money. But let's skip all that. He suggests as an alternative, if you have private equity in your 401k or in your retirement account, Kinross Gold, which I like. It's a New York Stock Exchange company. I don't know a lot about it, but you know how you get favorable impressions of stocks when you read about them. They're doing, they're behaving like private equity in the sense they're lending out money, but they don't have the debt risk, the management fees, or the liquidity discount. Gold at 4,700, Kinross is extremely profitable. The symbol is KGC, like KFC with a G instead of an F. Last year, Kinross returned $1.5 billion in total capital to shareholders. Wow, that's pretty good. Anyway, that's one idea they like. Let's not go through it. Top 5 buys. Top 5 buys. Kinross Gold is number 1. Buy it up to $40 a share. Number 2, I've loved this. I've loved this. I've loved this so much for so long because I'm too far gone. Wheaton Precious Metals, WPM. Khaki International, CACI, number 3. You can buy Wheaton up to 144 a share. You can buy Khaki up to 650 a share. Anglo Gold Ashanti, symbol is AU, is a good symbol. You can buy that up to 135. And Danow, D-N-O-W, the symbol is D-N-O-W. You can buy that up to 17 a share. Americans, young and not so young, now carry $1.84 trillion in combined federal and private student loan debt. 10% of federal borrowers are 90 days delinquent or higher. Automobile loans add another 1.6 trillion in debt. Sooner or later, expect massive write-downs, project cancellations. So they're talking about the AI sector might experience that. It's possible. And the federal government itself, a spending machine, 40 cents of every dollar federally, every dollar paid out federally, rests on borrowed money. Interest alone on the national debt now runs over $1 trillion annually before we even get to the rest of the budget. More dollars chasing the same goods as energy costs push prices higher and real productivity lags. Private credit might be the biggest crack in the dam, but make no mistake, the whole structure is compromised. So how do you de-risk? Everybody's different. There's no one size fits all. And we don't do personal financial advice. Still, it's time to take a hard look at every position in your portfolio and ask the why question. Unless you have a compelling reason to hold, it may be time to let go. And if you sell and miss, a little more upside, is that the worst thing? Especially weighed against the market tumble chance driven by the debt problems. On holding cash, cash loses purchasing power over the long haul, but along the way, cash is enormously useful. It relieves pressure and stress. It offers daily confidence that you can pay your bills. And it even gives you a chance to buy bargains. This brings to mind Donald Trump from his 1990 Playboy interview. Nice knockers. No, that was the movie. That was the movie with, about Frankenstein. And he's carrying the woman. And he says, nice knockers. Of course, she's fully presented to the audience. But then the camera turns to the door, and the knockers are these huge iron, wrought iron designed door knockers. Anyway, Donald Trump's Playboy interview. Cash is king. People that have cash are going to be able to buy things very inexpensively in a down market. So here's their rules. Rule number 1. It's great to make money in the markets, but the foundational principle is to avoid big losses. Yeah, and unfortunately, that's what we've all experienced by chasing these stocks. And rule number 2 is to make money. Okay. That's what I think Railtown's going to allow us all to do. Rising profits alone can make miners attractive. Capital is rotating out of riskier sectors and into mining. Over the last 15 years, big money starved the mining sector, and mining requires a lot of capital. That is changing now, fast. Mining's golden trifecta. He likes triple flat precious metals, TFPM. He likes Agnico Eagle Mines, AEM, Freeport McMoran, FCX. The money fleeing overextended tech ventures, bloated data center projects, and crumbling private credit structures doesn't simply evaporate. It rotates. And right now it's rotating into hard assets that miners pull out of the ground, including gold, silver, and copper at prices few predicted even 2 years ago. So yes, sell in May if you're holding positions you can't defend. De-risk, hold cash, and stay nimble. I think we can defend all day long Railtown. But go away, not entirely. The investors who come out ahead who won't be the ones that went to the beach. They sprung into the breach. They'll be the ones who understood that a dam full of cracks is also full of opportunity. Precious metals are right up there. And the summer doldrums may turn out to be the best buying opportunity of the year. That's from Byron King. I used to subscribe to his letter. Procter and Gamble apparently will be a defensive play if everything turns to quicksand. Ah, get ready for $8 gasoline. Let's see. Without a doubt, the greatest political issue of the past month concerns how Donald Trump has conducted the war in Iran. At this point, Trump really only has three options. He can declare victory and go home. Okay, that's a nice move, but it'll be viewed as defeat. Who cares? Iran would continue the war, as could Israel, and would control the Strait of Hormuz. Energy prices would remain high, and Persian Gulf oil would be scarce outside of countries aligned with Iran. Trump would be raked over the coals by the media. The second option is to keep bombing and wait for regime change. That's also a losing strategy. The people are united behind their government because of the US attack. The third is escalation, and that's what Trump is doing. Swell. Swell, swell. Trump is letting Iran set up its toll booth, but he's implementing a naval blockade further out. No country in the world can run that gauntlet. If you're a friend of Iran, the United States will stop you. If you're a friend of the United States, Iran won't let you out in the first place. Get ready for $8 gasoline if it stops there. Get ready for a global recession. Get ready for more escalation. It's the only card Trump has left to play. Oh, God, I won't read the rest of it. So if that all comes out that way, that's our global bust, which David Hunter's been calling for. I still think the market will overexceed the news and go to unimaginable highs. But that'll be our chance to buy puts and lighten up in our other positions. I don't know what it's going to mean for Railtown because Railtown isn't up at all. But I think we can hedge. That's, we got to get ready to hedge. All right, there's Jim Rickards. There's Dan Amos. There's Byron King. And there's Zach Scheit. These are your writers. Heavily into mining and energy. They like Newmont Mining, very close to your gold project. Fortuna Silver Mines, Ovantif, L3 Harris, Crescent Energy, CF Industries, Essential Utilities, Baxter International, that's healthcare. The PIMCO 25-year zero coupon ETF. ConocoPhillips, that's up there with Exxon as a great, and Chevron as great oil companies. Schlumberger, the Sprott Uranium Miners ETF. Barrick Gold, right down the street from your gold company. Fang, Diamondback Energy. Alamis Gold, I love it. All right, that's that review. You can subscribe. You can subscribe here. And if you want to just take a picture of that, you can subscribe to them. All right, let's see what your comments are. And I'm going to sign off at 4, so you won't have me to kick around anymore tonight. You won't have me around. Okay, let's see where we are. Ward Richardson, here comes the man. The man comes around. Good afternoon, William RT crew. The inflection point will start in June, where AI shifts from tech hype to enterprise infrastructure, us. There is not much more time to buy 3 cash cows for 1 smacker all day. Rail engine, Donna M. Pat M. I'll have to ask him tonight when he's back from golfing what his Roth cap amount is. Thanks. Do winning bets on golfing games count as income? This poor woman that fell down the manhole. Ward Richardson, for every $3 you spend on RT today, you could pick up a bonus share. $3 buys 10 shares, doesn't it? No, $3 buys. 1 share is 30 cents, 33 cents. So $3 buys 10 shares. Oh, I see what you're saying. So you get 11 shares for 10. You get a bonus share. I see what you're saying. Ward Richardson, NVIDIA earnings report, 4 p.m. sharp today. Well, I'm not going to stay on for that because then I'll miss the only excitement in my life in months. Donna M. Hi, Ward. Why the bonus share of Railtown if you purchase today? Richard K. Good afternoon, William. In the spirit of lucky. Good afternoon, Richard. Neil Gondek. Here's the other man, the triumvirate. You've heard from Neil, you've heard from Eric, and you've heard from Ward today. That is the triumvirate. I didn't pronounce that correctly. That is the key 3 in Railtown. Neil Gondek, hi, Bill and follow RT investors. I couldn't resist yesterday. Wow. And bought another 24,500 at 43.5 Canadian. Way overweight position now with just a tad under 600K. I think that's amazing, and I don't think it's overweight. If anything, you're going to say you're going to be just like me. I could have bought more. I wish I had bought more. I'm never satisfied. Like any spoiled brat out there, I'm never satisfied. Neil Gondek. Good job, Neil. Added. $43.5. Wow. Tad under 600. Well, you know, that one way to look at it, if the stock moves and you feel overweighted, which I don't think you will, once it starts moving, I think you're going to feel underweight, believe it or not. But it gives you, I mean, you could sell 100,000 shares at 10 or 15 or 20 or 25 and still have 500,000 shares, which is ginormous. So I think you've done a great thing, Neil. Many people here might wonder, are you seeing something to add to it now? Or is it just my persuasiveness? We all know the answer to the second part. So you must be seeing something. Or maybe it's just you feel that time is ticking in our favor. Could be that. Ooh. It's a little extreme. Donna. SPCX IPO, June 12th. Wow. Good friend of mine. That's his birthday. He'll have a lot to celebrate. SpaceX IPO, June 12th. I wonder if that's Elon Musk's birthday. Nope, June 28th. He was born June 28th. Which makes him, I guess, a Cancer, doesn't it? Hello, Donna. At 30 cents a share, that's 90 cents on the dollar. Yeah, exactly. That's why he's saying you get that little bonus. Donna, and I, my cost is higher than this. So it's like, darn it, I could have had more. But you just can't get it perfect. It's impossible. Donna M., I bought my sister 11 shares of Railtown over distribution. Wow, nice. 3104. Wow. Do you see the computers are still giving you shares that don't exist? Nobody's selling. So take advantage of it. Pat M., Donna, 8,600 for each of you, unless it goes higher for 27. All right, so Bezos blasts Mondami for casting billionaire Ken Griffin as a villain. Why not? He is a villain. Iconic American beer brand. Pabst Blue Ribbon. Schlitz. Oh well. All right, so I have 15 minutes. What are we going to talk about? There's got to be something to talk about. Let's see what. Let's see if it's here. Page 7. No. Page 172. No. 197. No. 207 maybe. I don't think I can find it. Oh, here. No. Trying to find the speech that Roosevelt gave. I can't find it. About the only thing we have to fear is fear itself. Neil Gondek, Meta laying off 8,000 employees. Full throttle ahead with AI. NVIDIA, Dell CEOs are banking on agentic. See, agentic agents. This is Railtown. Agentic agents as vital in the business ecosystem. Not hard to see where Railtown fits in. Joe Marty. Damn, Neil. Impressive. Pat M. Awesome, Neil. Ricky Brogan. I will be adding 34K to 40K shares in the next few days, waiting for funds. I hope, as long as it stays here, you'll get that. Otherwise, it might be less, but that's congratulations, Ricky. Congratulations. Ward Richardson. Neil Gondek, thumbs up. Neil Gondek. I'm investing to where the puck is going. AI software inside Thales data centers, and going to be a whole lot more. You could read that two ways, that he's going to invest a lot more, or the other way, which I think is what it means, is it's going to be in a lot more than just the Thales data centers. That's what I think he means. And I come up with simply the Thales CEO projects $2 billion in annual revenue by 2028 from AI-enabled technologies. $2 billion. I don't know. Is that all data centers? Is it consulting services which also use the data centers? I just don't know. But if you take half, 1 billion, and if you assume that it, based on PR and presentations and other things we've seen, that Railtown sits astride and in between and amongst the entire stack at Thales data centers, and they revenue share. I pick 20%. You could pick 25, 30%. You could pick 15, 10. You pick what you want. I pick 20%. So that's 20% times $1 billion. That gives 200 million in annual revenue coming to Railtown. That's one data center or one cluster of data centers. If you go by what Neil's saying, and there's going to be a whole lot more, what if you add Rogers Communications? What if you add the other one, Bell Canada? What if you add in the United States? I don't know, Verizon or Microsoft or AT&T? Who knows? Down here. What if you add one in Europe, one in Asia, one in the Middle East? I don't know. Let your thoughts run. You only need 5 of those to get to $1 billion in annual revenue. Now, I caution, my estimate might be high, might be low. So let's say you get 10 of those to get to $1 billion. What is $1 billion in nearly 100% revenue worth? Particularly if it's growing, particularly if the target market is somewhere between 300 billion annually and well over $1 trillion annually. What multiple is given? 25 times? 15 times? 20? Let's say 20 times. That's a $20 billion company. And of course, you may say that I'm, way out ahead of what we know. And I would have to agree with you. I'm being very dewy-eyed here. But let's just say that happens. $20 billion valuation by 2028. I'm not saying right now. That's 88 smackers a share. 88 smackers. Ricky Brogan, hopefully I'll be in the 100K club. Good for you, Ricky. Congratulations. I hope you get there. If you don't, maybe you're in the 90K club. It's still fine. We all have, I was joking with somebody, but we all have this obsession with round numbers. And in this case, it might matter because I don't think we're going to have a reason to sell. But in normal situations, buying it in a round number, that's not your only decision. You're going to have a sell decision, and you're not going to sell in round numbers. So it's, or not necessarily. So it's, it's a silly obsession we humans have. I have it too. I have the exact same obsession. All right. I'm at a loss to make it through 8 minutes. Ricky Brogan, like the great Tom Petty said, the waiting is the hardest part. I guess it depends on how old you are. Donna M. Ricky, that will be great. Let's see if I had anything else here to go over. Doesn't look like it. I had the Barons, but I think this is an old Barons, so it's not worth. It's not worth going through that. It's a month old. So, all right. I don't know what else to talk about. We can go through the headlines, see what they're saying about NVIDIA just before it announces. Wall Street counts down to NVIDIA earnings. AI heavyweight NVIDIA will report its first quarter results in one of the most anticipated announcements of the earnings season. Stocks jump as oil prices fall, bond sell-off eases. That's something we should be talking about. The bond market is starting to give scary, scary signals. I think it's going to be okay. David Hunter, others think that, and obviously Jim Rickards thinks that interest rates are going to go down. There'll be a deflationary period. But just remember, if the bond market gives up the ghost, it's like the Tyrannosaurus Rex versus a little farm pig inside, comparing the bond market to the stock market. Oil plunges as Trump says U.S. in final stages of Iran deal. Miriam's not going to be happy, Donald. Miriam's going to be mad at you. OpenAI aims to file IPO in a couple of weeks. Big question you need to ask yourself. Do you feel lucky? Well, do you? Punk. China confirms Boeing purchases. What's MP Materials? Is MP Materials, did they buy Meta Materials? Rare earth miner. Oh, it's rare earth miner. No, that's different. 4 minutes. The Daily Hate says Trump is unhinged. This just in. Four minutes. Let's look at the. Oh, a sinkhole. A sinkhole shuts down runway at major U.S. airport. I don't recognize the airport from the sky, but I haven't flown that much recently. A sinkhole has closed a runway at New York City's LaGuardia Airport, leading to cancellations and delays as workers make repairs. Wow. That's pretty scary. President Trump jokes, quote, "I'll go to Israel, run for prime minister," unquote. He'd get elected. All right, 2 minutes. Let's see how the market's doing. And then I'm going to sign off and try to get on. NRGV's down 4 cents at 479.5. GDC's down 0.0267 at 11 cents. HELP is down 39 cents at 56 cents. ZJYL is flat. Mountain is 103. Let's see what next strip's doing if I have it. I don't have it. NTRP. Next strip is 232. 227, down 10 cents. And the Dow is up 650,000 to 50,024. And you know I've been calling for all-time highs and all of this. NASDAQ 26,200. S&P 7,432. And I was calling for 7,500 before it was cool. Railtown is down 0.0027 because, of course, they want you depressed, ever depressed, ever depressed. Wow, the Dow at 50,000. That's astonishing. I remember I stayed, I was, it doesn't matter. It's back way before these big numbers now, but I was President's Club. And on the President's Club trip, and I stayed in Sean Connery's bungalow, but I was swimming with Sir John Templeton, and he either said it, there was a group of us there, or he said it in the breakfast talk, and then he gave us a talk later on. But I remember he said the Japanese Dow was at something like 44,000 or 60,000. And our Dow was like 1,100. And he said they're going to cross. He said our Dow will go to the price of the Japanese stock market's Dow. And at a minimum, when the Japanese market pulls back, we'll cross it. And here it is, much later, many years later. You have to wait for it. So the Dow's closed at 50,000. That is impressive. Let's see what if the earnings come through on you know, the one NVIDIA. Doesn't say. Live. Okay, here, we'll watch live. I guess I can wait to see what the earnings are. Eric Belanger says, Ricky Brogan, 100K Club, this is the way. I agree, Ricky. That's a huge, huge milestone. Huge milestone. But every position is going to be valuable. So let me go to NVIDIA stock and just see if the news comes up on Yahoo. Live updates on CNBC. Is it worth the click to CNBC? I guess so. Earnings per share. Okay, NVIDIA reports fiscal first quarter results after the bell. Here's what analysts are expecting. According to the LSEG, they expect $1.67. They expect revenue of $78.86. The conference calls at 5 p.m. Investors are focused on NVIDIA's data center growth and will look for any sign that demand is picking up or waning. Competition in AI chips is picking up as Amazon and Google. All right, let's see. No, that's not going to give it to me. Let's go to the stock. Let's go to news. NVIDIA to report Q1 earnings. We'll announce it already. Live from Bloomberg. Let's see what Bloomberg says. They don't give me access. All right, let's go back to Yahoo and see what it says. I'm only going to give it one more minute because I gotta get ready. All right, here, watch our expert coverage. Nothing to see. Wall Street counts down to NVIDIA earnings. Yes, so what are they? Everything to know about NVIDIA's autonomous driving business. It says they're not going to allow female robot drivers. No, it doesn't say that. It doesn't say that. All right, that's 405. I guess you guys know where to find the earnings. It hasn't come out yet. Yeah, it hasn't come out. At least I don't see it. So I wish everybody peace. We'll talk tomorrow. Don't hang in there, Ricky. Great job. Everybody else, particularly Edward Nunny and Neil Gondek. These are big ads today. But I think my favorite ad of the day, other than Donna's sister at 11, is Pete Greek at 10 shares. Bravo. We'll catch you on the flip side.